But now business and investors have to adapt to a new environment of rising costs, wages and interest rates. And for those who can't easily pass on price rises, life could get much tougher. Anton Tagliaferro is one of Australia's most experienced investment managers. He set up Investors Mutual 24 years ago with a philosophy of seeking value and quality, and he joins me now. So, OK, Anton, after 3 weeks, where at one stage the ASX 200 down by 8.5%, you've had commodity price falls, you've had cryptocurrencies falling off a log, as it were. Is this the time for buying or the time for selling, do you think?
I think it depends what sort of stocks you own. I think, some sectors are being oversold. Again, we're talking about the quality end. I'd still be very cautious about the speculative end, and all these tech stocks which make no money. I still think potentially they have further to fall. But certainly in some of the quality sort of stocks like Horizon, Brambles, even some of the listed property trusts, that have been taking a pasting, which some of them are now on yields of 6%, which and below net tangible asset backing, they look reasonably good.
Okay, so on those days when you suddenly see big falls, and we've seen them in the past week, we've seen them over the past 3 weeks, are you actively seeking the opportunities to buy these types of stocks? Is that what you're seeking to do on those days?
Yes, we are. Yeah. I mean, you've got to bear in mind a lot of these stocks have lagged for years. They haven't gone anywhere. All the musical chairs has been in the sort of the megaports and the WiseTechs and the Afterpays, which, in our view are fairly worthless sort of stocks. Many of these companies I've mentioned, the Brambles, the Horizons, have been sort of neglected and ignored because they haven't been hot or sexy enough. Well, suddenly, the world seems to be adopting a more cautious nature. Some of those high-flying stocks, they're volatile. They're bouncing, for example, today, and yesterday they'll be down and they'll be volatile. But I think it's changed. The investors will be more cautious now. The cost of money is not zero. That era of zero interest rates seems to be behind us. The question is now, how high do they go? That's the difficult question.
Okay, and then the second part about that is whether, not just here, but around the world, the central banks can somehow manufacture the soft landing that everybody would prefer, everybody would like. But sometimes they get it wrong. And, even in the United States, Jerome Powell has warned, if we don't get this right, there will be a recession. So that's the problem right now.
Well, the difficulty, Ross, of course, is if you look at the US, they have inflation at 8% currently, and their cash rate is below 1%. So even though inflation may be a bit high because, the oil price has doubled and it's not going to happen again, so that inflation rate may come down to, 4%, 5%. That's still a long way from zero to get your cash rate to neutral.
Yes.
And that's the question, is how far does inflation fall and how far does that cash rate have to go until it's neutral? And the danger is, of course, if rates go to 5 or 6%, already the 30-year mortgage rate in the US is over 5%, and that's going to cause, some difficulties in the housing construction market.
So bring that back to Australia, because same sort of thing.
Absolutely.
And I see parallels between 1987 and 1991. The big share market crash, a housing boom, interest rates were cut, everything was done to keep the market pretty much afloat. But then all of a sudden, inflation took off.
That's right.
Interest rates had to chase it. That's what caused the recession.
That's right.
Do you see those similarities?
Well, that's the big risk, isn't it? We don't know. I mean, I think central banks are betting on inflation being transitory. But of course, if inflation stays higher for longer and it's harder to come down. And then the danger now, of course, is wage rises are coming through because people, they need more money because their fuel prices are up, their bread prices, because wheat's up. So, wage rises are coming through, which means inflation may become stubborn, stuck. Not so transitory as central banks are hoping. So that's the big question. So in our view, the question marks are still going to be out. The market will be volatile. There'll be days when everyone goes, "Oh, inflation's peaked, it's great," and there'll be days when everyone goes, "Oh no, it's still up there." So it's going to be a choppy few months. So we would still stay away from the speculative sort of stuff and buy the quality stuff when they look at it.
Okay, then I would just want to ask you, one question of politics, and that is that both sides in this election campaign seem to have gone in with a rhetoric that we don't need to cut spending because we're going to grow the economy faster. Both sides effectively saying this. And as a result of that, there's going to be plenty of jobs and plenty of wage rises out there. Does that, from an investment point of view, right now in our economy, does that sit well with you?
I mean, at the end of the day, Ross, the politicians don't know, because the truth is if inflation remains stubbornly high and the central bank, the RBA, which is supposed to be independent, does its job and raises rates to get, to neutral, which is, let's say, 4 or 5%. So you might end up with a mortgage rate in Australia of 6 or 7, who knows, which will be pretty painful for some people. And that would slow things down dramatically. So look, nobody really knows. The big question, I think, is where does inflation land? It is high. There are expectations it is peaking, but how quickly does it come down? And in the meantime, do central banks raise rates quickly to bring it to that inflation, to get to neutral? That's the big question.
And also, it's the fact that there has been so much money that's been printed and which has been borrowed to make certain that our economy was kept afloat. So that means that there's a lot of borrowings in the household sector, a lot of borrowings in the government sector. If anything's a risk, it is the fact that there are so many borrowings that really can't cope with significant interest rate rises.
Which means maybe they can't go up as high. But I think that that's one of the uncertainties. And clearly, we had we had low rates before COVID. We had ridiculously low rates through COVID and all this spending, lavish spending, as you're saying. And now we're coming out of the other side of it. The economies are booming. Inflation is high, and the central banks have to put rates up. Now, whether that ends up in a hard landing or soft landing, that question's going to be around for a while yet.
So my commentary has been that I think Australia is sleepwalking towards a recession. Is there an argument for that?
Look, I think you can say that in many places around the world. I think the US particularly as well, So, and that's the fine balance the central banks have got to now play. Is they have to put rates up, they have to slow things down, they have to bring inflation down. But do they tip? Do they go too far to tip everything into a recession?
I'll tell you what, Anton Tagliaferro, always good to get your knowledge here on the program, and many thanks for your time today.
Thanks for asking me, Ross.